our Q&A portion, if we are ready. Okay, so we asked you guys any advanced questions that you might have for our panelists this afternoon, and we will go through them first. So advanced Q&A, the way we did this, I think, is we subdivided it into topics. So we will be going through that before we turn over to the live Q&A session. So what's our first question set? Can we see it? All right. So we have initially questions on the economy. So Romel and two others are asking, when is the likelihood of cutting interest rates, and what is the probability that it will happen? Yeah, I think the prominent word here is the when. Could maybe April? Would you like to take a stab at this one?
Okay, I'd be more confident of the rate cuts in the second half of this year. Yeah, I think there is a high probability of it happening anyway. As I said, the US is one factor, and as you can see, even the Fed in the dot plot is saying we're going to cut rates. The difference is the market is anticipating them to cut much more. But 75 basis points. The BSP is also saying, 75 basis points. And the reason why inflation is high right now is El Nino. So if we address that El Nino problem, then inflation will peak. And then by the second half, El Nino will be addressed. And hopefully, that would give the BSP more confidence in cutting interest rates. So in terms of probability, high probability, but at least 75 basis points maybe in the second half of 2024.
Okay. All right. I would also like to focus on this other question that Robel had, especially given what DOF Secretary Recto mentioned recently that you brought up also during your presentation. Do you think additional taxes will be imposed in order for the government to hit the 4.3 trillion revenue target?
They said not this year, and I don't think it will happen this year because they haven't done the work yet that will allow it to be passed this year. But I won't be surprised if next year they will come out with new taxes. Yun na nga. But on the other hand, I'd like to see if they can sustain improvement in revenue collection. Because so far in 2023, the good news is they actually overachieved in terms of revenue collection. If they can sustain that in 24 and 25, then definitely that's good.
Okay. All right. Okay, maybe we can table some of the other questions here, and then we could get back to it later if we have time. All right, can we proceed with the next question set? Okay, so questions on global issues. So geopolitical tensions, the number one risk that our investors are seeing at the moment. Maybe I could direct this one first to Juanis. So the tensions in the West Philippine Sea and Taiwan, Anthony and four others are asking, will it affect the market?
Well, I think it'll only do it if it gets aggravated enough. As things are right now, I mean, of course, there is some edginess, but it hasn't really stopped anything. There's still flows of supply in that area, which is still okay. But unless things intensify, I don't think it would get that bad. It's unlike what happened to Ukraine before, where things slowed down, food products were slowed, and those can be quite a detriment to us, right? Especially what's also happening to the Red Sea, where the flow of tankers are being curtailed. That could be a problem. So in this particular case, in the West Philippine Sea and Taiwan, I mean, something has to flare up in order for a tightness to appear. And so far, that's not happening.
Okay. All right. Yeah, thanks for that, Juanis. Maybe the next one here I could address to April. This is not anything that I've also seen yet being asked by our client base. So maybe it would be interesting to address it here. How does the BRICS currency affect the Philippine economy and the Philippine stocks?
Yeah, that's an interesting question, but probably because you see a lot of countries finding ways to reduce their dependence on the US dollar. I think it is a reflection of that. And in some ways, yun na nga especially when the US kind of monetized the dollar when with what it did to Russia, which is why all these people are thinking we don't want to be too dependent on the US dollar. But as I have said, it will take a while before uh, you know uh, we can really say that we've we've hit critical levels where people can not use the US dollar, because right now no other currency compares to the US dollar in terms of liquidity and uh, you know uh, uh, being part of the global trade. That's why, yeah, probably no impact in the short term, but I think this is a space that we should all be monitoring.
Okay. Thanks for that, April. So dollar is still king at present, so not a lot of impact for now. Could we move on first to our next question set? Okay, so this time around, questions on AI. Also very interesting. I think this is really the trend that's helped propel the US to do well over the past year and a half. So Jarek and some other investors are asking, how would AI impact local companies and how could stock market investors position? And I think corollary to that, Richard there was asking, what are some AI related stocks in the PSEi? So investors are looking to ride this trend locally. Is it possible? Maybe April first, and then maybe Juanis could also add his thoughts on this topic.
Okay, so on the local companies, of course, the concern is what if you know Filipinos lose jobs, especially in the BPO sector because of AI. It's quite interesting. I shared to you a Bloomberg article saying that so far it's just too expensive to spend on AI. It's still cheaper to hire people to do the jobs that AI can do. I mean, I think we're safe for now, and of course, we're seeing the trends. You still see a lot of BPOs expanding their footprints here in the Philippines. So looks like right now it's still not yet a threat because maybe it's still too expensive to roll out AI. And how do you capitalize on it? Unfortunately, in the Philippines, we don't have any AI place. I think you have to go to the US to capitalize on, say, manufacturers of the AI chips, no, like NVIDIA, to take advantage. Because I think the thing is, although AI is gaining popularity, there's no way yet, no established way on how companies can monetize on the trend. At least not right now.
Okay, thanks for that, April. Juanis, do you have anything to add there?
Well, I agree with what April said. I think in the short term, maybe not so much of a threat just yet. People are still in the early adoption phase, and they're trying to figure out how do we build this into our system, and who do we partner with, and how much of an extension can it do. But I think the question somebody wrote there was 2 to 5 years from now, and I think that's in a sweet spot of how this particular how AI can, I think, but at that time, feel something more consequential, especially to the BPOs, unless they figure out how to use it to their advantage and how to embed it into their systems. So I think you probably feel it in about 2 years.
Yeah. So I think what we're also saying here, Joderick, is that yeah, at this point, AI is still more expensive to implement versus, like I say, just hiring BPO workers. So maybe it's not yet in the immediate, but definitely a trend that everyone needs to watch over the course of the next few quarters and years. Okay, so next, what do we have, guys? All right. Okay, so questions on Outlook. I think this might be something that's already been discussed, but maybe for the benefit of some attendees who did not catch it from April. This is a question from Raphael. What key macroeconomic factors and market trends do you believe will significantly impact investment opportunities in 2024?
Yeah, I think the big question right now, well, first of all, is inflation and interest rates, diba? Which is why the markets are going up, because looks like inflation is no longer a problem globally, and central banks will be loosening their monetary policies. But for me, the big question is hard landings of landing in the US, because if the US suffers from a hard landing, then uh, all countries around the world will suffer from a contagion.
All right. Yeah. Thanks for that, April. Yeah, so we need to be on the lookout for that hard landing. Okay, next question set, please. All right. Yeah, I think this one very interesting. Maybe we could spend a little bit of time here. So this is questions on strategy. So I'll address the question of Solita first. What is the best thing to do with your existing stocks that are 50% or more negative? Do we sell, buy more, or just stay? Juanis, what could you advise to Solita?
Right. I don't. It's very hard to just say just because my stock's down 50% that can I recover or not. I mean, I'd have to do a bottom up review, right? Because, for example, if you're standing in a stock like that's really downtrending, Nickel Asia, Converge, and etc., I would advise you switch. But
Okay.
for example, if you happen to buy, let's say, a rally of a particular stock, and you just happen to buy the high, and it's now pulling back, you're down 50%. I have to make an assessment for each stock and tell you whether I think you should stick out with this because it's already recovering, or whether it's still gonna show you a phase of malaise, right? So very difficult
Yeah.
to be able to put more meaning into that.
Yep. Yep. I think the right answer in this one is it really could be a case to case basis. Okay, but maybe we could move to the next question first here from Neil. To those who are in the green after capitalizing on the recent downtrend, so I think these are people who were able to buy when the index was low. How should we approach a potential uptrend in the PSEi? Yeah, maybe for Juanis again.
I think it's in line with what I was talking about earlier. You're in the green now because the market is showing the degree of the rally. Maybe some paring down might be good to be able to keep some of the gains that you've managed to move, because we are anticipating a correction. And then just have enough cash to be able to buy back into that thing. Or like April likes to always say, have some dry powder for opportunities. Is that the word you use, April?
Yes.
Okay. All right. Sige, how about like this one before we go to the next set? I like the question of Rosario also here. Maybe this one for April. How long is too long when holding on to a stock? I've held some banking stocks since 2008. So, global financial crisis pa lang, hawak na yung banks. Is it already too long? Did they just hold? Well, what could you advise?
Syempre di ba? Kami parang Warren Buffett.
Yeah.
My favorite holding period is for
Oh my
8 months. Not just kidding. But then that said, okay, let's just be objective about it. You gotta ask yourself if the company, is there something fundamentally wrong with the company? If there's something fundamentally wrong with the company, then you know, uh, time to cut your losses and just invest in something else, diba? But if there's nothing fundamentally wrong, ngayon ka pa bebenta. Or as one has said, maybe switch to those that are stronger, because, okay, I've also said in my columns, for example, if you're holding on to, say, a more smaller cap issue, a less liquid one, you might want to buy or switch it to larger cap, more active issues, because they're the ones who will go up first. And then when they go up, you'll have time to switch to the smaller ones, because that's what happens. People will buy the bigger ones, the more actively traded ones. And then when they become expensive, then they'll go to the smaller ones.
Yeah. Yeah. Okay. Thanks for that, April. I guess ano talaga siya. It's really a case-to-case basis. Very difficult to just answer it outright. My advice also is follow Juanis and April very closely in terms of their research notes, at least to help guide you. All right, maybe we could go through quickly on some of the remaining group questions so that we could do a live Q&A. I'm cognizant that the time is 5:32 at the moment. I'd like to thank everyone for still staying with us. Okay, so let's try to go through this one very quickly now. Questions on technicals. Erwin is asking, okay, yeah, this one. What are the technical signs that may indicate that we are at the start of a sustainable bull run? And just to loop into that as well, Teresina is asking, how will you know if market corrections are just pullbacks? Para hindi sila matakot, like as you referred to earlier, Juanis. How do you answer this?
Well, in the first question, I pointed out some things. You have a higher low now. That gives you a higher base to be able to protect your risk on. The other thing I was telling you is that if a third downtrend line break would manifest, that would put pretty much a sure thing that we've already reversed. So those are the technical aspects that we've looked at. Prices are also trading above most moving averages. That's also another positive front inside. So you've got those things going for us. With regard to the second question, the way we normally do this is if you do have a higher low, more likely you're not going to get something more than a correction. And so I will do is I would anticipate that we'll probably get a pullback first. So we're talking about a pullback. It's a swing down that's less than 10%. Right. That's what a pullback is supposed to be. And I would assume that's what we're probably going to see in this round.
Yep. All right. Yeah, thanks for that, Honest. So pullbacks, if they're less than 10%, and maybe if they hold some of the shorter term moving averages. So what's our next question set, please? Questions on sector. Okay, maybe just a short answer here. April, if I could direct it to you. What industry or company is best to invest in this 2024? And maybe just after that, what's your outlook quickly on the property sector?
Okay. We give you a list of the, well, kasi parang marami, di ba? But yeah, more defensive sectors because I'm a bit worried about what's gonna happen in the US. So I gave you, yeah, a lot of companies, but if you were to group them, probably more defensive like power, some REITs, not all REITs, and then consumers na like Monde or consumer staples. Yeah, those would be good. Okay, so banks, properties, I'm not as keen because I'm working on the premise that we will have a recession in the US and a possible contagion. And in light of that, usually you don't want to be in sectors that are more discretionary or more sensitive to economic gyrations. So in that respect, your properties or your banks are a little bit more sensitive. But not to say that they are bad, but it's just that they might be more sensitive in case the market gets sold down.
Okay. Thanks for that, April. So not too hot yet on the general property sector in general. What's our next question set, guys? Do we still have? Okay, so questions on stock picks. I think Juanis had a slide earlier in this one, but if you guys would just like to at least mention some names here. What second and third liners, so small caps, could potentially outperform the index from Monsky?
Second liners or Juanis, you answered that na lang.
Sige, Juanis first. Or Juanis na lang.
Yeah, because Juanis has a list, right?
Yeah. So I guess looking into the aspect of some of the maybe non-index issues that I was pointing out to earlier, that's what I've geared, let's say, as a second liner because they're not really that embedded yet. Under the leaders column that I showed in one of my slides, you'll see quite a bit of issues that are there, and maybe I'll focus like issues like DNL. Maybe potentially issues like I'm quite watching because it's creating a pattern like Double Dragon. You might also maybe look at things at issues like Plus, very offhand issues like that because I think they might be able to still continue once they finish with their consolidations.
All right. Okay, thanks for that. One is, of course, just a word of warning if we're trying to play our hand, of course, on these second, third liner issues. Be aware that they are more volatile, and there's a potential really to see larger drawdowns in names like these. All right, what's our last question set before we go to the live questions? So this one, questions on dividend investing. So I think we're gathering a lot of interest from our audience with regards to REITs the past few weeks. So maybe April, how do you? I already said it's a preferred sector of yours, but how do you think REITs will perform this 2024? And I think maybe the question from Willie could be a bit more relevant here. Is it better to buy REITs now instead of buying dividend-paying stock? So if it's a matter of choosing, mas okay ba mag-REITs kesa high dividend payers?
Yeah, okay. Yung REITs, the answer is it's complicated actually. Kasi I wouldn't, the REITs would be fine if you look at the top-down picture, just interest rates. The problem kasi for a lot of the REITs that listed is that they're very heavily focused on the office sector. And the office sector right now is suffering from an oversupply. And then based on our discussions kasi, okay, a lot of them targeted the BPO sector, which is kind of resilient. The problem with the BPO sector right now is that a lot of them or a lot of the employees in the BPO sector want work from home. So the footprint is actually going down. So you have new tenants coming in. The problem is because many of them are sizing down, the net increase is not as fast as the increase in supply. So there might be some downward pressure on some REITs that are very heavy in offices. Okay, not all. I'm not saying not all. That's why if we look at REITs, we want yung medyo may konting kwento like A REIT and C REIT. We're not actively promoting the others na walang ginagawa. We're just, what we put in, that's it. We're not injecting because for them, they feel like, lugi naman kami if we inject, given the current yield of 6% or 7%, we want it to go down first before we inject. And then, the vacancy rates. I mean, if they go up, then sorry, diba? Will give you less in terms of cash dividends.
Okay, I think I think that's pretty fair. All right, I think that's all we have in terms of the advanced questions. Thank you for everyone who are still with us. We will now move through the live questions. Maybe we could have a few of them here. So I think this will be posted through Slido. Can I see the first question here? So from Jake E. Okay. Oh, very interesting, I guess, question and appropriate. So is it recommended to sell if recession is coming? Okay. Who would like to answer it first?
Well, I can't predict the recession is coming, so April has to answer this.
Yeah, okay. Let me answer that. Kasi, di ba, minsan mga tanong, kung mag-recession, edi wag na lang tayong mag-own stocks, di ba? But, okay, I would like to answer that because my answer will also depend how heavily you are invested in stocks and what time frame do you really have. If you're the type of investor who wants to make money quick, and then you can't afford to stay invested, then I think, yeah, maybe you should sell. But, if you have a lot of money naman and what you're buying is just a small part of your portfolio, then I think, it's okay to stay invested because eto na lang, let's not go very far. I mean, think about the third quarter and fourth quarter when the market was weak. And then remember when it recovered so fast that if you didn't own anything, maiwanan ka talaga, di ba? I mean, stocks are so cheap right now anyway, and you're being paid beautiful, beautiful cash dividends. Diba? So if you're not really owning a lot of it, I don't see any reason why you need to liquidate because you're being paid to wait right now. The cash dividends are so good, and a lot of the listed companies have very solid balance sheets. Probably their profits are going to go down, but I don't see them suffering from a threat of bankruptcy.
Okay. Yeah, thanks for that, April. So I think it's really a case
advantage I have.
Okay.
Because in my end, it's simple. If technicals tell me to sell, I'm out, even if recession or not. Even with a recession, if you get a buy signal, you can still go into a buy. So it should be easy enough to handle.
Yeah. On the technicals, it's easy. It's just rules based.
Yeah.
Sige. Okay. Next live question here from Krishna. If we were already positioned in the leaders like Jollibee, GDCap, and BDO, how many percent would you recommend to top slice? So very specific question. Juanis, could you address this one?
So earlier, I'd say between 25 to 50%, and keep the other half as your core position, especially in the good class stocks, because I think eventually that's going to come back up anyway.
Yeah. Okay. So I think Juanis's recommendation there is keep the core, so up to half. Maybe as long as you're buying companies like these are good companies, even if like April's recession hits, these should be able to recover, I think, in due time. What's our next question, please? All right. So from Ivan, he is asking, should we take geopolitical tensions on our own region more seriously when it comes to investing? Tycoons in our country, such as SM's Teresita C. Coson, has already shown concern over the rising tensions as it might affect businesses in the Philippines. So should we have a more regional focus, I think, in general, is what Ivan is asking. April, would you like to address this one?
Well, honestly, I don't. So I don't want to to make comments on things that I really don't know. So I mean, what can we do,
We're
right?
glad we're not political analysts, because those are
Yeah.
for them.
Yeah, that's
Yeah,
true.
but parang interesting if you try to listen to what other people are saying. They're saying maybe um the war will not be, it will be a Cold War type, not really uh, like a ground war. So probably it will be in the net or other things. I don't know, but maybe we should just watch this space and try to learn about what's happening.
Yep. All right. Yeah, thank you. Thank you for that, April. Can you see the next question, please? All right. From Cromwell. China's economy seems to be in a downturn. Is this a concerning factor for the Philippine market? If so, in what Philippine sector or sectors will it greatly affect? Yeah.
Well, yeah, for us, not so much, because we're not really uh, that dependent on exports. Yes, Chinese tourists account for a big chunk of tourism, but tourism does not account for 20% of GDP, like it does in Thailand. In fact, I did a computation pre-pandemic. I think foreign tourists account for 3% of GDP. And our biggest source of tourists is Korea, not China. Although, yeah, China is a big chunk, but it's not that big. So the impact of China is not as much. That's why we're not as worried. But maybe if you want to, like, in an indirect play on China in the Philippines, probably would be your mining stocks.
Mhm.
So if you're concerned about China, maybe be a little bit cautious on the mining stocks.
Okay. Yeah, thanks for that, April. Do we still have other live questions which we could address at the moment? All right. So from Anne. Okay, so I guess this one is maybe assuming either the recession or pullback scenario pans out. When is the best time to buy after a correction starts? From Anne. So, Juanis, do you want to handle this one?
Um, I guess the idea is knowing how to determine whether correction is done, right? And I guess that's what we do, because the time element could vary. Like, for example, what happened last year, the minute we saw a correction begin in January, it ended in October, right? And unless you knew it was over and you tried to buy that in between, you would have gotten caught in a jumble of a mess. So I guess the positioning inside there is your indicators have to be telling you already that enough correction has been done, that it's stabilized, it's breaking out of downtrend lines. Your MACDs are now positive. They're breaking over exponential moving averages, and together all that tells you it's time to buy after that correction, not beforehand. And unfortunately, I can't tell you, does it take 1 month, 2 months? It could take its own time. But I anticipate this year that we're probably going to have two swing cycles. So that means it'll correct, rally first. There might be an opportunity there. Then it'll correct again. Then maybe year-end rally again. So there might be two of this. So if that can help a little bit, I'm thinking maybe after U.S. elections will be part two.
Maybe I guess just to thresh out that idea also one is further. So when you're talking about those corrections, you are expecting them to be higher lows, right? So meaning the index probably should stay above 6,000 when you see these types of corrections. Okay. All right. Thanks, Juanis. I was told by marketing that that's the last live question that we have. So before I put the bow into the whole presentation, I would just like to ask one last question to both Juanis and April. And it is this one. Could we flash it, please? So for the benefit of our listeners that are still here towards the end of our session. So what is your number one tip for investors and traders for the next few months? So either of you may answer first.
Ladies first.
Ladies first.
No, number one tip. Wow, that's so hard. Yeah, I guess. Yeah, that's tough. One tip only. um, Maybe to have a little cash on the side because of the heightened uncertainty. Um, well, yeah, I mean, as the market continues to go up, I think we should still have some investments. Okay, but maybe to just have some cash on the side in case the market goes down. We don't want to be fully invested. We want to be able to take advantage of opportunities as they become available.
Okay. Very fair. Thanks for that, April. So it's keep dry powder for April or cash. How about you, Juanis?
I think I'd say that just keep your trading eyes open. In the last few years, have been kind of sleepy years. I think this year will be a little different. There'll be more volatility, so opportunities will clearly be abound. And like you said, Zerge, the term is be an opportunist, right? Look for these things. You have to actively look for them and prepare your mind for them. And when it's there, please take it. Don't get scared.